Citizens of the United States should brace themselves and should not ignore the signs of a catastrophic financial disaster. What is happening right now is like a disease that happens over and over again. Understanding the process and cause can help us identify the warning signs, since everything that occurs has a reason. And with those warning signs, we'll be able to predict how the dynamic will play out and determine if people can afford to repay their loans. We know that we have a problem when the rate of debt accumulation reaches a certain point and becomes unmanageable. The ability of the central bank and the Federal Reserve to handle a debt situation won't be effective when we start to approach zero interest rates. The most recent occurrences of it were in 1928, 1929, 30, and 31. The same issue that occurred in 2007 and 2009, a financial crisis brought on by excessive debt. So in this video, we'll talk about Ray Dalio's explanation of the changing world order, money and inflation, lessons from the past generations, and why he believes the US is entering a catastrophic financial crisis. Watch the video till the end and let's find out. Ray Dalio is an American billionaire investor and hedge fund manager. In 1975, Dalio founded the investment management firm Bridgewater Associates, and 40 years later, Bridgewater became the largest hedge fund in the world. Dalio's assets are thought to be worth $18 billion. In an interview, Dalio explained that he studied history and discovered that former US President Franklin Roosevelt did the same thing for the same reason, leading to the same result. Ray cites situations when this may be the case, such as when we have never experienced a war, a civil war, or similar conditions. Thus, left and right-wing populism are the major events of our lifetimes that we have not yet experienced but are related to inflation. He continued by stating that because populism has opposing ideals, a representative will stand up for that person's cause against the opposition rather than make a compromise or seek a middle ground. We see a new kind of conflict when populism is fueled by the biggest disparities in income and opportunity. This was especially noticeable between 1930 and 1945. In the conversation, Dalio talks about the changing global order, money, inflation, civil unrest, and the need for capitalism to grow. Ray Dalio is well known for conducting a historical study to identify the connections between events and their causes. He thinks that the economy functions mechanically rather than arbitrarily. As a result, each economic historical event may be linked to specific causes or circumstances. Things that are happening right now have happened in the past, but never in our lifetime. One of these is the massive quantity of debt generation that is being monetized and transferred through our economy's financial system. Another is how much political and internal rivalry exists between the left and the right, which has an impact on markets and tax laws. In addition, Ray Dalio is worried about the likelihood of a confrontation with China because of misunderstandings. Although Dalio acknowledged that he may have made incorrect predictions in the past, he maintained that historical tendencies over the previous years make future calamities likely. There was a battle when this international order started in 1945. A dominant force established the norms, and then there was peace and prosperity. The United States, therefore, joined the American International Order with a monopoly on military power, 80% of the global economy and half of the global GDP. There are now considerable power struggles despite the fact that the power imbalance has nearly closed. People believe that cash is a secure investment, but Ray Dalio claims that it is eroding in purchasing value. They are aware that it is a risky investment because interest rates were zero and inflation was 8% last year. There was an 8% shift in purchasing power. The inflation cycle is altered and strengthened as a result. We focus too much on the exchange rate between currencies and not enough on the fact that they aren't alternatives. It's a decision for transactions, not for wealth. Therefore, none of those are beneficial if you own European euros and debt that is denominated in euros and are receiving a negative interest rate or close to it, as is the case in Japan. All asset prices for products and services fell in the 1930s. There are transfers to other assets since all the currencies along those lines are connected and have poor wealth stores. Ray then gave the advice that it pays to borrow money, or if not, to invest in things that keep their purchasing value. Examine the actual returns of the loan instrument you employ to keep your riches in cash. The only type of financial asset that may be possessed privately is gold. People have been seeking non-gold alternatives to fiat money. In a world where money is based on fiat, cryptocurrency is a natural replacement. Like Bitcoin, it hasn't been compromised in 11 years, which increases its appeal. It has benefits, but Ray continued, it's not a private asset. It's rapidly forbidden, and it doesn't make up a significant enough portion of wealth. A little asset compared to many other items, such as Microsoft, which is worth more than cryptocurrency, is Bitcoin, which may be valued at about $700 billion. Ray noted that since it hasn't yet reached those specific phases, then he said, I think people are fighting for fresh money. The Fed and central banks are aware that when inflation is unacceptably high and the economy is robust, you must apply the brakes. And when the situation is reversed, you should apply the gas. What has occurred is that they have allowed interest rates to be so low and in certain circumstances damaging because they have poured so much petrol on the engine. They created such an abundance of liquidity that they not only triggered monetary inflation but also a financial catastrophe. When there is no interest rate, people take out interest-only loans, making the goods free. The world has changed to accommodate the fact that you can purchase houses and several other items. Then more of that money was produced after they had done so at a relatively low interest rate in comparison to inflation. Since inflation is increasing, our debt load has increased significantly and our economy is in peril. Markets are affected, as you can see. Because the majority of Americans hold stocks and bonds, the Fed's trade-off will be challenging. The current state of monetary policy is highly restrictive. Ray said that he bases his judgments on the availability and demand of loans. Deficits for the federal government will be substantial. As a result, they will sell debt, such as bonds and treasury bills. Private investors are losing money due to pension funds, trillions of dollars in debt, etc. While there is inflation, people are also losing purchasing power and selling, which results in an imbalance in the selling of goods. A recession is indicated by a decrease in private credit due to that selling imbalance. According to Ray, the tightening process is only getting started since actual hikes and short rates are just being started. The trade-off between GDP and inflation will be challenging since other things are growing. Ray thinks we've entered an era of stagflation because of this. We don't have enough money, actual money or otherwise. We can produce a lot of fiat currency, but we don't have enough real money. Lastly, Ray Dalio disagrees with financial advisors who claim that we need to spend money since after considering social circumstances and infrastructure, people don't have the money to spend. Do you agree with Ray on this one? Let us know in the comment section below. Please don't forget to click the like and subscribe buttons. Also, ring that bell icon so you'll be notified whenever we have new videos. Thank you for watching and we will see you in our following videos.